Good morning, everybody. Thank you all for joining us for our webinar today. And special thanks to our speakers for taking the time to be with us. Today, we will be exploring the impact of Bank Negara Malaysia's new digital banking license on Malaysia's incumbent banks. Now, the framework was first issued was issued on the 31st of December last year. And the reason why I remember that so clearly was because I think I was on the way out for a New Year's Eve celebration, and then my WhatsApp group was exploding, and I was like, that could only mean one thing. Bank Negara has published the guideline. Now, this is a landmark piece of regulation, and arguably we've not really seen anything that could potentially overhaul the entire landscape since the 90s merger, right? And today, joining us to discuss this important topic, we are joined by a star-studded panel. On the top there, we have Effendy Shahul Hamid, the Chief Executive Officer for CIMB Digital Assets and Group Chief Executive Officer for Touch 'n Go Group. Below him, we have Farilla Abdullah, the Chief Strategy Officer for Bank Islam. And below her, we have Dr. Siew who is the Group Chief Strategy Officer for RHB Banking Group. And last but not least, we have Riddhi Dutta, the Regional Head for ASEAN and India in Backbase. Now, let's begin by maybe broadly talking about what you guys think about BNM's digital banking guidelines. We can start with Effendy on the top there. Effendy, what are your thoughts on the new guidelines?
Yeah, thanks, Vincent. I think, obviously it's welcome. And I think that if you look at what's been happening in Southeast Asia today, certainly with Singapore leading the way in coming up with these licenses, and I think Philippines also has a guideline right now, I think it's timely for us to have something like that. The reality of the situation is that it's not the unbanked that we need to deal with in the banking sector today, it's the underbanked, right? And I think digital banks, with regards to what they bring to the table and the techniques and certainly the business models, there will be a lot of benefits that many of the stakeholders can take part of. The regulations itself, I think, seem quite fair, they seem quite clear. They seem quite succinct and they seem quite simple, right? So I think that there will be quite a lot of interest. I do think that it's not just about banks becoming more digital, but I think it's going to be about new capabilities that they're going to be brought into the market and the ability for customers, be it retail, SMEs, to take advantage of that. So I look forward to it. I think the guidelines are succinct. And I do think it points to the fact that you're going to see financial services players with new capabilities coming to the market. So in short, I think it's good that way.
Very cool. And Farilla, what are your thoughts on the new guidelines from Bank Negara Malaysia?
Yeah, it was definitely highly anticipated. I think there was also a draft that came out earlier in the year. So it's I think it's comprehensive. It touches elements of innovation, consumer protection, financial system stability, national interest as well. It's very focused on inclusion. And BNM has been very consistent on that agenda. There was, on the innovation side, there was specific reference to cloud, big data, AI, and the controls and governance around them. And from the consumer protection aspects, guidelines for the foundational phase, which have thresholds and limits prior to graduating to operations without asset limits. And then there's also a focus on the path to profitability, where the business plan needs to have a third-party attestation, an exit plan, preference also given to Malaysians to guard the best interests of Malaysia. So I think it's in step with BNM's reputation as a strong regulator and definitely in line with guidelines from other markets.
And I think there were comments from all the startups who also felt that it's the right balance. In particular, they have the foundational phase, which allows them to kind of go into it, right? Thanks for your thoughts, Dr. Siew. What are your thoughts on this?
Farilla and Effendy say actually this is really welcome it. I think maybe just two main points. The foundational phase, I think it actually set a very good framework and guideline for the companies, either banks and non-banks, who are interested in participating in this incentive experiment, right? Because I think there's definitely some relaxation on the regulations on liquidity and then managing the risk. At the same time, they kept the asset size to about 3 billion maximum. So it's not too big, but actually gives sufficient room for new entrants to the market to do the experiment, and it will definitely jumpstart the innovation in the industry. So I think at the end, all the players will definitely benefit. But I think more importantly is also the underserved segment, that we can see that there will be a more visible model to serve. Obviously, there's a need to take care of this underserved segment. Underserved means that they are non-bank. They could be bank, but they're just not able to get full access to the banking services as traditional customers. So I think with that, we will be able to find out more how this new group of new entrants into the market able to serve the underserved customer in a more cost-effective and efficient manner. Because clearly today, the traditional banking model hasn't been able to serve this so-called underserved segment well. Otherwise, they would not be called underserved. So I think from innovation, stimulation, as well as helping the underserved customers, I think is definitely a very good news.
I think that's something that we could definitely dive into a little bit later in terms of the unit economics for the underserved and whether or not incumbents would eventually look into it, and if so, how. That's definitely something we want to dive into a bit later. But before that, let's go to Riddhi. And Riddhi, I'm sure you have some perspectives given that you've worked with clients from around the region, right? So what do you think of Malaysia's guidelines in comparison to all the other regions that you guys are active in?
Yeah, I think very interesting insights by all the other three panelists. And the only point that I would like to add here is, we all know that the Central Bank of Malaysia probably did the longest consultation. They saw Hong Kong happening, they saw Singapore happening, they saw Philippines happening, and I think this helped. Because if you now look at the guidelines, as all the other panelists mentioned, it's very, very balanced. Whether you look at financial stability, whether you look at depositors' interest, whether you look at the innovation, I think Farilla spoke about cloud, big data, AI. They have done a very good balance. We saw in other countries they had to do multiple consultations, they had to review it, they had to edit it. But I think in Malaysia they have come out with a very clear set of guidelines. And now we are hearing about so many applications that are about to get in, which is quite interesting. If you start thinking about the number of applications. But it is being actually driven by the fact that the guidelines are very clear, very balanced, and very good for whether it's a large incumbent bank trying to get into a pure digital banking space, or whether it's a new fintech or a new probably a larger consortium which is trying to put in a bid. The one thing which I would like to add on to, and especially the fact that we are working with some of these new startup banks in countries like Philippines, where we are trying to set them up from scratch. One thing which we have really figured out is that there are 4 broad things that any bank, whether it's in Malaysia, whether it's in Philippines, whether it's in Singapore, need to focus on. And I think it's hinged around the overall guidelines from the central bank. And these are obviously a very clear business strategy and vision. So what are your financials? What is your business strategy? What is your vision? Needs to be very, very clearly looked at. Innovation, it's a given. I think all my fellow panelists come from that background. They know when we're talking about innovation, whether it's cloud, whether it's AI, whether it's a platform business, that's a given. The third is the overall risk and control framework. That's where the stability and the financial security comes into picture. And finally, I think, Farilla and we were talking about it before this session started, is about the cultural and the mindset aspect of it, right? So these are our best practices that we have learned from other banks in the region, in Singapore, in Philippines, and in Hong Kong, when we have seen them start from scratch and build up a new digital offering. But yeah, I think whatever the points that Effendy, Farilla, and Dr. Siew mentioned pretty much resonate with what I have in my mind as well.
All right, thank you for that, Riddhi. And I guess the next question I have for the rest of the panelists is kind of what is the impact that you see this guideline on your particular business, and how do you plan to respond to these new guidelines, right? Because if we look at Hong Kong, we see some incumbent banks also throwing their hat in the ring with BOC and SC. In Singapore, then you have SC pursuing the SFRB route, right, where they are still trying to look at spinning off, but based on their own existing licensing framework. So let's start with Effendy first. And I think Effendy is in a unique position where you do have a digital bank in Philippines. You have Touch and Go under your group, which is in collaboration with. And so what is CIMB's plan, and how do you think this is impacting CIMB's business?
Yeah, thanks for that. It's an interesting question. I'll try and make it as concise as possible. So as a banking group, CIMB, we've obviously taken some different bets, right? So the first thing that we say is that digital is a priority and it's something that we need to address. So for our two newest markets, which is essentially the Philippines and Vietnam, we've gone down a full digital model, right? So if you look at the most newest one, which is the Philippines Bank, we've acquired over 3 million customers in just over 2 years of operations. Going down a full digital model that does not see us originating so much ourselves, but going to partnerships with people like GCash in the Philippines. So from a strategic perspective, the first thing that we said was some of our new markets that we are in, we want to go fully digital, and we've gone down that road for some markets. In terms of our core markets, where Malaysia and Indonesia largely, and to many extents Thailand, we have gone down the road of really modernizing the core, right? So we're really, instead of building a digital bank in-house, we are digitizing the old bank, yeah? And I think that all those people who are on this panel with me will know that that is probably a very difficult thing to do. There's a lot of legacy in place, but that is something that we continue to do to make sure that if you take Malaysia, for example, and if you take a bet that these new digital banks will be in operations end 22, early 23, then the incumbents from a large perspective will need to have certain capabilities to compete. So to that extent, we are making sure that we try and make services more and more available. We are also exploring the route to potentially go and look at one of these licenses that Bank Negara have come up with. And we're going to look at it more at the touch and go parent level. And the way we're going to look at it is to say that we do not need a control of a consortium, but we're quite happy to play a secondary role in terms of bringing platform and certainly financial services expertise. And the reason we're doing that is for our e-wallet business, we're quite happy to leave it in payments today. Yeah, I think that if you look at the models, and certainly if you know our partners, which is Ant, and today also operates some very successful businesses in China that are isolating banking per se and origination of banking. So we feel that from a strategic perspective, if you look at Malaysia, the parent bank will always be relevant. It has to digitize very fast. We feel we have a very strong ecosystem originator in the e-wallet company, and we want to play some kind of small banking consortium on the digital side if it exists, right? We are not obsessed with needing to do it, but we feel that there could be advantages. The way we see the whole the whole landscape evolving with the digital bank is I kind of like the model around Kakao and what they've done in Korea. I like the model around We and what they've done in China. And if you look at those models are 100% anchored on bringing good balance sheet management capability and great ecosystem origination models, right? So as a banking group, we're quite diverse. We are clear that one size does not fit all. We have strategies for the incumbents, we have strategies for new markets, and we certainly have strategies for ecosystem and platform origination, right? So in short, that's how we are looking at the entire evolution of the landscape.
I think it's quite clear that there are some inspirations taken from those models, right? Because you look at your e-wallet and then you look at your launch of Go Plus, which is happening next week. There's a lot of elements of various unbundled financial services within the group. But before I move on to Farilla, I just have another quick follow-up question for you. Because if we look at the Touch and Go group, you already have an online lending business and you're going to wealth tech and you already have a payments business. Is it really necessary to secure another license, or can you already provide these innovations without having the additional license? Just a quick one.
Yeah, good question. I think that the answer lies somewhere in between here, right? So we will be providing digital financial services. But I think that there are a few things that you have to believe to want to have a banking license, right? First, you have to believe that you can play a very good treasury business function from banking. Secondly, is you've got to be convinced that the ROEs that are coming through the banking business is good. And thirdly, you have to believe that the entire portion from manufacturing to origination is quite clear. So I think, Vincent, to your question, I do think that the Touch and Go franchise, as you rightly pointed out, will be dishing out financial services in that sense. But our license does not allow us to collect deposits pure play, neither does it allow us to take risk on the balance sheet. But it does not mean you can't have a very strong operating distribution business, right? So I think banking or digital banks are not 100% essential to that business, because essentially it operates on an open architecture. But sometimes some links, and given our history as banks, there could be some sense in having a small stake in one. Yeah. But to answer your question, CIMB as a group today, it's not something that we essentially need to carry out our strategies.
Okay, thank you for that insight. Let's move on to Farilla. And Farilla, recently, Bank Islam has been on the news that you guys are spinning off a digital banking unit under your existing license. So I'm guessing that's the route that Bank Islam is going. Tell us more about that.
Yeah, so perhaps let me try and address the question of how this guideline impact the incumbents. I think that this is definitely an exciting development for the financial services industry. It pushes the industry to up the ante, to raise the bar in terms of innovation of products and services, delighting customers, and also adoption of new business models enabled by digital. And actually, the acceleration of digitalization is already very much underway. And we're not just talking about new technology adoption or automation, such as RPA or going into the cloud. They come hand in hand, with embedding the culture and the change of mindset. So, for example, the adoption of design thinking or the human-centered design and agile had enveloped, the financial industry at least 5 years back. So I think this is really, really exciting times. In terms of what we have planned within our organization, Bank Islam is very focused on meeting our 6 strategic objectives. And these 6 strategic objectives are actually crafted and embedded from being a value-based intermediary. And our vision is also very critical in converging to the shared goals. So our vision is advancing prosperity for all. So that's very important. That's the underlying purpose. So to meet this vision, we are adopting actually this approach called a 2-speed digitalization, where there is a holistic transformation plan that we call Code to One. Code stands for culture excellence, operational excellence, and digital excellence. And that's holistic, right? It covers all aspects. But in parallel, we also have established a division that is dedicated to build out and stand up a digital bank, a window, if you may, a digital bank window. So this digital bank is a greenfield implementation. And we set out to do everything differently from the get-go. For example, the team that we set up is cross-functional. We also look at new technology stacks so that we are not encumbered by our legacy system. And we also look towards, as much as possible, a full cloud implementation. And our ideation is driven by personas, is driven by target segments. And over and above that, we also started looking for partners and service providers who share the same vision and passion, who are able to give us agility, who are able to give us scalability. And the vision is that we're building this platform to enable new segments to access our products and to connect to our products and services, because we know customers are not only going to come from our branches in the future or our own proprietary digital channels. They can come from digital marketplaces, from fintechs and the like. And so having this platform that employs new business models that are also seamless to connect to is very important in terms of how we move forward.
Thank you, Farilla. And there's a few things that I would like to dive into a bit later, but maybe we can move to Dr. Siew first. But before we do that, we do have a lot of people tuning in today, nearly 300 plus tuning in live, and there's a lot of questions coming in. We'll try our best to address it, but I'd like to request that whoever that's asking the question, please mention who you would like to ask the question to so I can direct it to the right speaker. So let's move on to Dr. Siew. Now, Dr. Siew, there are some market rumors about RHB potentially going in with Axiata. Maybe you can comment on that, and also you can share with us what your views are in terms of the impact for incumbents and how RHB plans to move forward in light of this new landscape. Dr. Siew, you have the floor.
Thank you. Thank you, Vincent. Maybe I'll start with broadly how we plan to compete. We have been competing in the market. I mean, RHB has moved beyond by just offering a financial services or just using digital channel sort of business model. Our strategy is quite clear. I mean, if you notice, for example, in SME, so our strategy is really ecosystem. What it means is we look at the customer pain points, and financial services is only one of those pain points. Yeah. So in our SME solutions, where we have is we have accounting services, we have payroll, we have inventory control, different sort of services. Obviously, we partner with all the ecosystem players to offer to our customers. And then offering loans, cash management, only part. So at the end, the way that we compete is not only offering financial services product, it's basically it's more like a solution providers for our customers. Similarly, for customers as well, our mortgage is not only offering mortgage, right? So we have something called the homeowner journeys, whereby customer will be able to get mortgage, get renovation services, furniture, and so on. So all these non-financial services products, we actually, again, partner with all the relevant vendors, experts in the market. So broadly, it is actually not just financial services, but also ecosystem solution provider. Now, in order for us to part of this ecosystem, we continually need to partners with different players, whether it's a fintech, whereby we will get the technology capability, digital capability, talent, and so on, or the non-financial service, whereby we will get touch points of experience or even data for our data analytics. So all this actually cover all what we plan to do in our so-called digital transformation. And also we need to do our own internal digitization, fix the core technology. But those are the enablers, but the core strategy itself is ecosystem play to meet the customer needs. Now, with the framework, with the digital banking framework that actually available in the market, we think that it will be actually very good opportunity for us to see how those innovation and experiments are going to happen, and how RHB parent bank, core bank, will be able to learn from those innovation or experiments. This is what we think that is a huge benefit for us. As far as your questions about collaboration with different company or specific telco like Axiata, we have been working with different companies and different even with Axiata on a number of areas. I think those kind of partnerships we will continue to support our ecosystem strategy.
So, Dr. Siew, what it sounds like to me right now that you're able to share with us is that RHB's core focus is still on strengthening its digital core. So just to quickly kind of ask as well, I mean, because Effendy on CIMB side said he is open to a license. Farilla on Bank in some side said that her bank is actually more focused on spinning off a unit. Are you able to comment on whether or not RHB would like to spin off or strengthen the core or go into a consortium, or you're unable to comment at the moment?
I think strengthening the core internal digitizations or working with different bank, non-bank partners, that one is given, as I mentioned, right? That's what we've been doing. Now, whether we want to go for a new license with the partners, I think that's the questions about whether we want to get into underserved segment and whether we can win in the underserved segment. So that investigation and study is actually still ongoing, right? Like if there's any substantial development, obviously, there will be an announcement. For now, I think we will focus on our core business and work with different partners, and then open for any possible options.
Sure. We'll be sure to check in again from time to time. Riddhi, what are your thoughts in terms of the impact of the guidelines on incumbents, and where do you think banks should go with this in Malaysia? Go ahead, Riddhi. You have the floor.
Yeah. No, I think, see, the first thing is that the key strength that any incumbent has is the is the legacy and the trust that they already have established with the public, right? So they can only build on that. Now, in my mind, there are three ways that incumbents could look at reacting to some of these new guidelines, and I think what I heard from the three banks on the panel is a combination of the three strategies. One is go in all in, go all in, as Effendi said. Why not go in and put in yourself? And I'll give an example, an instance of a bank that we work with in the region in Philippines, which is Bank of the Philippine Islands, which is the oldest bank in Southeast Asia. I'm pretty sure all of us might have heard about this bank. And this bank has decided to go all in. They have invested in the right platforms and the right technology. They have not invested on this today. I think they had a foresight and they were able to do that 4 years earlier. So today, if you look at how that particular bank has grown, despite all the competition, and with due credit, I think CIMB is giving real tough competition to them in the Philippines. But the way they have been able to grow with their customers on their digital channels has been remarkable. From currently they are clocking around 5.5 million customers purely accessing their digital channels, which is almost 100% growth in the last 2 years. And as a result of that, they have been able to access a large number of fintechs. Last heard, they were working with 300 fintech partners because of the fact that they had invested in certain platforms. So that is one way of how do you react to guidelines, where you go all in and you do things yourself. The other is, as Farilla mentioned, can you launch a speedboat? Can you spin off, right? Where you do a best of both worlds. You bring in your legacy, you bring in your trust, plus you bring in the new way of working, innovation, agile, all of that. And again, we have seen examples of that. A customer of ours in Vietnam, VP Bank, and they have launched this completely new speedboat, spin-off called as Siew Bank, which is a completely different brand, fully digital, mobile only, with a very clear target segment, very clear set of offerings, and very clear set of differentiators that they want to set themselves apart. So that is the second strategy. And then the third one, which we are seeing more and more, is this entire thing around ecosystem cooperation. Can, let's say, a traditional bank tie hands with a telco, with a fintech, let's say in the area of payments and e-wallet provider, and go in and provide a completely different digital banking experience. So that is where the entire ecosystem and partnership angle comes in. So as I mentioned earlier, while I started off, is that there are three approaches broadly, and banks, depending on their risk appetite, depending on where they see themselves in the next 5 years, how confident they are about their own internal operations and how innovative they are, might decide to choose one of the three. But that is broadly what we have seen. The main underlying thing is that it's not a threat. I think I remember 2 or 3 years back when we started talking about digital only banks or virtual banks, and I go back to the discussions we had in Hong Kong. There was a lot of things that these banks would be a threat to the incumbents. So that I think that misnomer has gone. It's not a threat anymore. It's actually become a boon for the incumbents as well, because it is forcing them in a way. When I hear people from CIMB or RHB or Bank Islam, it is forcing them in a way to sort of react and in a better manner, so that for the better manner for the bank as well as for the customers.
Thank you for that, Riddhi. Now, before I move on to the next question, does anyone in the panel have anything else to add to this conversation? Nope. Okay. Otherwise, let's move on. Thanks again, Riddhi. So I think one of the themes that kind of emerged from this is to either look at spin-off or join a consortium. But I guess I kind of want to address this question to anyone in the panelists who would like to go ahead and take the question, because we've observed in several markets, right? And most recently, RBS with Bo, that wasn't very successful. And that's hardly the only case. We've seen a lot of incumbent banks thinking that, okay, let's try to build a speedboat and let's try to digitize that. But we've seen a lot of failures in that space. Is that really the right strategy? Have you observed this case, and how do you plan to kind of avoid that kind of incident in your own respective organization? Now, I open that question to the floor. Whichever speaker that would like to take this, feel free to unmute your mic, and then I'll bring you up on stage. Farilla, yes, go ahead.
Yeah. Okay. Obviously, we're very aware of those use cases where an incumbent tries to spin off and based on maybe certain indicators, right, that they had set themselves, decided not to continue. And we studied this quite rigorously. I think there's always, so the experience of different banks would be different, but I think the critical success factor really is in terms of how you're running that outfit differently. Because ultimately, if the culture and the mindset does not change or is not more aligned to how you would handle a disruptive company, then the outcome of it would not be any different than if you were to just, come up with a new digital channel from the bank. So very important, that culture and the mindset. And when I talk about the mindset, that probably needs to be a more inclination towards the entrepreneurial mindset. So that's where it starts. Then everything else would need to come into place. So there needs to be also courage in looking at an entirely new tech stack. And I think in most cases, when we talk about next gen technology, when we talk about applications or systems that maybe the bank is not familiar with, there's a lot of risk assessment that needs to be undertaken. So this has to be rigorous for sure. And most times you have to kind of like pave the way, and that could be difficult. Most times the momentum gets lost because maybe it's too hard to push through some of the barriers that are there to push new innovation, right? So that could also be one of the pitfalls. So I think the critical success factors is always mindset. It's always about the courage to also push barriers. And it's about finding that unique selling proposition as well. Finding out what your minimum lovable product is that is that can be articulated clearly, that does not confuse the customers. Because if the spin-off offering is the same as what the mothership is offering, then it would be very difficult to also differentiate. So those are my thoughts. I think we continuously have to assess and monitor that progress. And I think that two-speed digitalization would not only benefit from the innovation side, but also from the ability to lift and drop the strength of either parties. Right, so a bank is very strong, very robust in terms of risk management and compliance, and so therefore the spin out can benefit straight away from that, and then from the agility side, from the design thinking side, the best practices, these can also be lifted and dropped once proven into the main bank. So those are my thoughts.
Sure, thank you, Farilla. I see Dr. Siew and Effendy have both unmuted their mic, so let's go with Dr. Siew first. But also to add another dimension, since Farilla also mentioned about cannibalization, right? Maybe you can offer some thoughts about that as well, whether, how do you kind of avoid that cannibalization from happening? Dr. Siew, you have the floor.
Thank you. So I think you're right that there are many digital banks, but not many profitable digital banks, to be honest. In fact, there are only based on what we have found is there's only a handful of successful or profitable digital banks, and obviously the good news is only a handful, but most of them are actually in Asia. The so-called profitable digital banks. I mean, Kakao Bank, WeBank, just two examples, right? In terms of critical success factor, in addition to what Farilla has mentioned, I think I want to point out is critical success factor in profitable digital bank is definitely not technology, definitely not good risk and compliance. I think if you study those so-called successful digital banks, you'll find that there are two main areas they manage to either fulfill or meet. Right. One is there is a clear unmet needs in the market. that can actually meet that needs. Whether it's underserved or there are already a lot of banking customers, most of the population bank, but it's just the traditional banks are too expensive or the service is just not good enough. So that actually clear unmet need that this new entrants can actually fulfill. The second we notice is usually this so-called successful digital bank, they start with a group of existing customers that actually in their other parts of the organizations. So for example, Kakao, right? They are actually a chat platform. So there are already a lot of customers using the chat platform, and then it's easier for them to migrate them to become a banking customers. WeBank is another example. So WeChat is actually very, very popular in China. So it's easier for them to incorporate the WeBank icon in the WeChat platform. So it's basically just become part of the products and services. So these are just some of the things that we notice at the macro level. These so-called digital banks, successful digital banks, manage to meet the unmet needs in the market that doesn't serve or services, products, as well as they start with a good set of customers that can actually build on. I think in terms of cannibalization, it depends on the target customers, right? So the fact that we have underserved customers in certain market, for example, in Malaysia, we estimated that there's roughly about 10 million, right? Whether it's retail customers or SME customers, roughly about 9 to 10 million so-called underserved customers. And the fact that they are underserved because traditional banks are really, not very active, so that, or is this just too costly to serve them? So I think the cannibalization will be minimal because those are actually not the target customer for traditional banks. Hence, open up a door for this new entrants to actually serve this group of customers and then become profitable. So that's my view. I think the cannibalization will probably be minimal rather than a big problem for incumbent bank.
Thank you, Dr. Siew. And Effendy, you wanted to comment as well, right? Let me bring you up on stage, and you have the floor. What are your views on this?
Yeah. My thoughts are, in an ideal world, I actually like what Farilla is doing, right? I do think that in an ideal world, if you can kind of create a parallel infrastructure in-house that can wholeheartedly operate in a separate way, I think that would be great. And I wish you the best in that, Farilla. One of the things that I realized with regards to that thing is two factors become very important, right? One is executive sponsorship. And executive sponsorship is extremely important because these things, more or less, when you compare against the core business, will appear as a red line on your P&L. And the ability for the board and the senior management to say that this red line is something that we can take in view of it turning blue in the future, I think it's very important. So I think if you can get executive sponsorship around that, it's going to be key. The other thing is definitions of success, right? Like today, as bankers, definitions of success are very clear. The matrices are very binary, right? But in digital infrastructures, leading indicators of definition of success are different, right? You start looking at number of customers acquired, or you start looking at cash-in rates, you start looking at different kinds of parameters, customer acquisition costs on digital channels. So I think that if you can get executive sponsorship around definition of successes and managing reading, I think it's very good. The second part is, I think both the panel members alluded to, is culture, right? And really, it's today, I think one has to believe that if you are given the mandate by the board to say, go and run a digital bank, can you put the people around it, whether is it within the bank or bring from outside the bank, and allow these people to operate within a model that has very separate definitions of success is key. So I think that in my view, that model is valid and that model is very ideal. It's just that it's difficult for us to find case studies for that right now, and I'd love to see one come up. The other part, on your part around cannibalization, right? I have a fairly strong view on that, right? In terms of between fintechs or whatever and banks, I think that the move is going to be more towards collaboration rather than competition, number one, yeah? And collaboration meaning that, at the center of every digital delivered product, there is a manufacturer on the back, right? The economics will have to be split more, but that is what it is. And when you take that within the context of cannibalization, it's quite interesting, right? So when we started, the touch and go wallet business. I mean, one of the things that I had to really debate with the board on was say that, hey, Effendy, if you just created a competitor, right? And I think there are two avenues to look at that. One is that, you know, disrupt yourself versus having someone else disrupt you. And secondly is really, is it would you or a bank have been able to serve that segment anyway? Yeah. So I think that cannibalization in terms of banks like us, I mean, the speakers here, if we pay a lot of attention to that, I think that it may impede innovativeness, right, in the long run. I feel so. But I do think that it is the survival of the fittest. Dr. Siew said, like, no bank controls one segment fully. Maybe you can use the digital segment to attack a segment that you're not strong in anyway. By the same time, the concept of this whole thing about natural selection is going to come true, right? It did the dinosaurs a lot of bad things in the Jurassic Age. I just hope that, you know, it doesn't do the same to banks, and for that we have to evolve, right? So that's my kind of view around those few things.
I guess the dinosaurs have to evolve to a more agile form, like chickens these days, right? You move around and run around really quickly. Riddhi, you unmuted your mic. I think you wanted to add something to this conversation. Go ahead, Riddhi.
So just one point, and I think Farilla alluded to it, and she spoke about the minimum lovable product. I think that is very important. That what is the problem that you're trying to solve? As, let's say, a new digital bank, are you trying to solve hundreds of problems, or are you trying to solve one particular pain point? And if you look at the most successful ones, and if we just move outside Asia, if you look at Revolut, right, which is one of the more successful digital banks, what did they start off doing? They just started off doing travel currencies and travel cards. That was the problem statement that they're trying to solve, nothing else. You move out to the SME space. We talk about the Coconut app so much these days. Now, what is Coconut doing? They're just simply trying to solve an accounting problem. That's about it. And by trying to solve that one problem, they are successful. And then obviously they have expanded into much larger operations. So I think that minimum lovable product or the minimum viable product, identifying that and working on that and trying to ensure that you have the best offering to address that problem is very, very important. The more you try to broad base yourself, the more you try to solve hundreds of problems at one time, I think the more you're setting yourselves up for failure. So that's the only point I wanted to add. Otherwise, I think my fellow panelists are much more experienced and they have been doing this for a living. So nothing else to add on top of what they have said.
I do love the term minimal lovable product, though.
Yeah, I mean, we used to call it as a minimum viable product, but I think I'm going to Farilla, with your permission, I'm going to use that term more and more going forward.
That should be the industry standard moving forward. Thank you, Riddhi. I think there's few key themes over here, right? So we look at the customer with the highest affinity to adopt your product, attacking the markets in which you're not already strong in, and there's a lot of good points from the speaker that speakers has been able to offer. So I'm looking at the questions that's coming in from the audience. I feel like there's a few that we've already addressed along the way, so I won't take those questions. But I'm going to thematically try to organize some of the other questions. So some of the other questions are looking at what kind of services, what kind of products that these new challenger banks will be able to offer that you potentially see could be a threat to your business. I know Riddhi addressed that a little bit earlier, but maybe you guys can, number one, kind of look at what potentially could impact your bottom lines. And Bank Negara did say there were 40 parties interested to apply for this license. So what are some of the more interesting players that you've observed from this space? Now, again, I'd like to open this to anyone in the panel. Whoever would like to go first can unmute the mic and I will bring them up. Everyone's polite. Effendy, go ahead.
Yeah, I think, my view and my take on the situation is that a new entrant to the market has to bring new capabilities, right? And capabilities are anchored on multi-way. One is on the distribution and offtake side, but secondly is in terms primarily on value proposition, right? It's like today, I mean, all of us sitting here know that there's a very high friction in anyone wanting to take a personal loan these days, right? And credit card is an option. A lot of people don't have that as an option. And people who go through traditional basis tend to go through a fairly painful process. So I think capability within addressing those pain points are quite key, right? And I don't think it's just going to be product centric, right? I do think that it has to cover and tick off a lot of boxes in terms of delivery, offtake, collections, service, etc., etc. I think that's one thing that I find. In terms of the licensees and the people who want to apply, I mean, personally, I quite like, I hope the C Group as a consortium applies. I think for them to go and apply for that license alone in Singapore and to get it is actually damn impressive, right? Excuse my French. But I do think that they certainly have a wonderful proposition around the ecosystem and e-commerce play, and certainly a lot of financial services delivery capacity. So that's quite interesting to me. I do like Grab, right? I do like, I mean, they compete, giving them a plug, but I do like what they do. I do like the difference in some of the things that it brings to the table. So I think that's quite interesting. The other interesting thing for me is if you look at the segments around Malaysia, obviously one of the areas that could be serviced by these new digital banks would be the people that companies who have consumer lending licenses today lend to, right? And that's a very big space, right? So I'm sure a few of the people with consumer lending licenses today will apply, and how they, at the end of the day, take a smaller balance sheet portfolio in a very specific segment and put that on a digital platform and add value is going to be quite interesting. So those are some of the things that I'm thinking about. I thought I'll share with you.
Cool. And I'm sure you find Touch and Go to be very interesting as well.
Always, my friend.
Okay, so moving along, I see Farilla has also unmuted. Farilla, what are your views on this? Go ahead.
Yeah, so with regards to, you asked the question about what products could be the one that is the most attractive. Actually, I look at the fact that the new digital banks are to look at this target segment that are underserved. That's where the disruption is going to happen. And I think there was some conversations about whether this target underserved markets actually serve as an insulation to the incumbent banks. I think absolutely not, because if you had read The Innovator's Dilemma by the late Christensen, it is the fact that innovation and disruption happens exactly when firms start looking at customers that they don't traditionally serve. As opposed to focusing on improving products and services to their current profitable customers, right? So I mean, it's not to say that those are not improvements. Those are also sustainable disruptions, but the real disruptions come when you look at those segments that are not traditionally profitable to you. So that's when it catalyzes the thinking around how do you make the unit economics work. I am looking at the entire products and services and business model, that landscape to change, and that's the one. The minute the mainstream adopts that kind of business model that started from the underserved segment, that's when real disruption will start to happen. So those are the things that I think for Bank Islam we continuously look at as well in terms of how to make those economics work, and especially because we're an Islamic bank, there are also social finance businesses that are embedded in how we run our business. So those are also part and parcel of the offering of Islamic bank and a digital bank for Bank Islam.
Cool. Before we move on to Dr. Siew, I just have a quick follow-up question for you, because you are an Islamic bank, right? And Bank Negara's licensing framework is one of the few that specifically said it's open to Islamic banks. So in regard to the underserved segment in the Islamic finance side of things, what are some of the underserved markets that you see could potentially be addressed?
So I think the typical ones would be, say, the segments of the B40, right? The segment of the MSME, how to boost their sustainable growth. I think gig workers as well, those who are not employed in the traditional manner, and whose income may be perceived as not predictable, so therefore would not be able to qualify for the typical credit underwriting. SMEs. So this is actually also quite well known, right? That this is there's a funding gap of 80 billion in the market, as well as foreign workers and their families, and some of whom are undocumented workers. So I think these are some of those, may not be comprehensive, but these are some of the targeted segments that are underserved. So from Islamic banking perspective, social finance can actually become an instrument to mobilize capital, to uplift the livelihood, to provide liquidity, to provide ways and manners for them to upskill themselves, so that the uplift to the livelihood is more permanent. And Bank Islam actually has a proposition called Sadaqah House, where we offer products, microfinancing, some form of microfinancing that combine this. In Islamic banking also, there are the social finance instruments like wakaf and zakat and donation or sadaqah that can be deployed to serve these underserved segments. So imagine if a fully digital manner can be adopted to mobilize all of this capital. So I think that's why Islamic banking is really quite logical when we talk about the digital banks trying to serve the underserved markets.
Thank you, Farilla. Let's move on to Dr. Siew. Dr. Siew, what are your views on, just to also refresh everyone's mind, is to look at what products and services you feel could be a threat to the business model of incumbent banks? And secondly, what are some of the potential applicants that you find to be particularly interesting? You have the floor, Dr. Siew.
Thank you, Vincent. I think the applicants, I think Effendy already covered, but I also have in mind, I think those are the place that we think that likely that will participate, or we think that they should. But in terms of the incumbent, in terms of the threat to the incumbent, I would probably like to split it into short term, mid term, and long term. Yeah. So I think in short term, one of the worries is it could be a price war. Yeah, because the new entrants would like to acquire customer quickly. So we also observe that in other markets as well. So they at the beginning, the 6 months, 9 months period, they offer very high deposit rate or very low interest rate for loans, right? So that would be one area that incumbent bank will need to be aware of, and hopefully, regulator will play an important role in this aspect. On the midterm, there are some products, mostly the retail customers or micro SME products. For example, like payment. We all know that payment nowadays is not only offered by banks. There are a lot of non-banks that offer payment. The other one is obviously small deposit. They could be higher interest rate. Personal loans. There's another area that usually will be very low to banks. And obviously for micro SMEs, there could be micro insurance and small loans as well. I think these are the few areas that probably will be more active for the digital banks. Whereas, the incumbent bank strength in terms of corporate banking, large investment banking, M&A, or even the middle market, I think those I wouldn't say that there will be a major threat to the incumbent bank, at least in the midterm, right? Because it will take the new entrants quite a long while to get into that space if they like to, and also it requires some kind of customer management as well. In the long term, I think it's probably go beyond products, yeah, because when we so-call the underserved segment, as they become more mature, they become more affluent, right? No longer become underserved. So the relationships with this group of customers, as they become more mature, more wealthier, and then that could be a long-term implication to the incumbent banks. Now, obviously, we all know that we have multiple bank accounts, we borrow from multiple banks, right? So it's not only restricted to one bank, but still, who will be your main bank? That will be the questions, right, in long term. So I think short term, mid term, and long term, I think these are the few horizons that banks will have to consider, and then how they respond to the banks.
I really like how you organize it into different time frames and how it impacts. And one thing that I didn't really think about is how eventually these SME relationships, they don't stay SME forever, right? So that's actually a really, really solid point to think about. Riddhi, you unmuted for a moment. Do you want to add something as well? Go ahead, Riddhi.
Yeah, no, I think I heard it from Effendy as well as from Dr. Siew about this entire thing around credit. And that is a space where we have seen a lot of innovation still needs to happen. While payments is still, there's a lot of maturity around payments, and a lot of players are doing payments in a very innovative way. Access to line of credit is a thing that when it comes to digital, it is still not there yet. And I can give you an instance. Back home where I'm from India, there's this app or this fintech called as MoneyTap, which is just 3 or 4 years old, and today they are dishing out, I think, personal loans worth $27 million every month from their app. Okay, from their app in less than 5 minutes. And that is where I've seen a lot of these new digital banks. I spoke about one in the Philippines that we're trying to set up. One of their key priorities is, can I dish out a loan in less than 1 minute? So I think the entire piece around credit and how easy can you give access to a line of credit is going to focus, because that has not been thought through very well, whether it's an incumbent bank or whether it's a digital bank. And the second piece, I think Dr. Siew also mentioned, is around the SME and micro SME. Because while we are talking about all these innovations that are happening, whether it's in Singapore, whether it's in other parts of the region, a large part of the innovation is still targeted towards the retail customers or the consumers. The SMEs, where lending, cash flow forecasting, can I do sweeping, can I do cash management? These are things where a lot of revenue comes for a particular bank, but when you start looking at, has enough digitization happened? Unfortunately, the answer is no. While I do see banks are moving in that stage where they are trying to move into much better customer experience, much better engagement around those areas. But I think that is also another potential product line that could be looked at. But I liked what Dr. Siew mentioned at the end, that at the end it's not going to be about the product, right? At the end it's going to be about, can you imbibe yourself across the entire customer life cycle or across the entire customer journey? And that is where, once you do that, your products will start falling into place. But I think from a short-term perspective, the credit and the SME piece would be, in my opinion, very, very critical.
Thank you. I think we've got a very holistic view from each speaker on this particular question. So before I move on to closing thoughts, does anyone else have anything else to add to this? No? Okay, cool. I guess, like we were joking before the session earlier, right? If we want to do 4 hours on this, we probably could. We are already, unfortunately, short on time. So maybe I can move on to the closing thoughts. And if the speakers would like to address any of the points brought up by the audience over here, you can also feel free to include in your closing thoughts as well. There's several themes around open banking, green financing, credit technologies, and whatnot. So maybe we can start by the video order here. Effendy's on top, so why don't we start with Effendy? Effendy, what are your closing thoughts?
Yeah, no, I think these things are obviously, there's a lot of things developing in financial services today. And I think if you are a player in financial services, whether you're a bank, insurer, asset manager, fintech distribution company, I think it's very important to understand where you embed yourself in the train of thought, and certainly within the value chain. I do think that models within financial services are going to change. I do think, like, if you look at incumbent banks, the change in capital rules over the last 10 years or 15 years really changed the way we do business, right? And I do think that regulations are going to evolve. I do think that regulators are going to get more and more, more and more modern. I do think that regulators are going to get very much in tune with how businesses need to operate. And I think the central bank here, Negara, certainly has done a very good job on it. I also would really, I would caution anyone who just wants to build a digital bank. I think there are many things that you have to believe in order to be able to be successful in it. I think Dr. Siew also alluded to the fact, and it's true, there are very, very few profitable digital banks in the world today, right? And I do think that we need to be very clear what it is. But nonetheless, I think it's great for the consumer. I do think that in 2 or 3 years from now, when these new incumbents come in, as financial services evolves, I do think that the ultimate winner is the consumer. I do think that this will drive higher standards, and I think that the players within the country will evolve, right? So I think consider well, weigh things properly, spend your money wisely, and maybe one of us or a few of us would get the models right. Yeah. So those are my closing statements. Thank you.
If not, maybe CIMB Digital Assets might acquire a few of them, right? Who knows?
Just wait and multiply.
Yeah. Thank you for that. Dr. Siew, what are your closing thoughts on this?
I think this is a new and good development for industry. I don't think it is a major threat to the incumbent banks. In fact, as I mentioned before, for example, in RHB, we think that you cannot just be a product provider, right? You have the ecosystem player, and then looking at the customer needs and build the customer needs with the full suites of solutions. I think the current development will actually offer more, definitely from a supply side, it will offer more players in terms of technology providers, ecosystem players, and also actually provide a good learning opportunity to come back and observe and see what works, and then we can adopt it quickly rather than we only do the experiment ourselves. So at the end of the day, I think it is really back to how you want to compete and where you can win, right? And as Effendy also mentioned just now, not many successful digital banks, right? I mean, those actually successful and profitable, they definitely have some foundation or macro factors, as well as good execution, good executional capabilities to make it happen. But if you only have technology itself, it's not going to be enough. I think technology is a key enabler, but if it doesn't actually meet the needs of the market, and also without the right commitment, I think it's very difficult to compete and be successful. So at the end, I think this is a healthy development for the industry. I think that it will benefit multiple players and industries.
Thank you, Dr. Siew. Let's move on to Farilla. Farilla, what is your closing thoughts for us?
Thanks, Vincent. I've said it before. I think it's really exciting development for the financial industry. Definitely, it should benefit the consumers, the customers. It reminds me of the tennis circuit. When the Williams sisters got into the circuit and started winning, all championship, and it raises the game of everybody. So similarly with this industry and the critical success factor. I mean, there's nothing stopping incumbent banks from taking on the innovation, from disrupting themselves first, right? So we're taking that challenge, and there needs to be the courage to also look at downward mobility. So also the landscape and the characteristic of probably continuously serving the profitable customers and the customers that probably that's the one that needs to be moved to look at those customers that are not traditionally served. So I think in some of the jargons that we use, those are the underserved market, and how to promote more financial inclusion, because then the disruption and the innovation can happen when you start to think about employing or imbibing new business models to make the economics work. So I think definitely exciting development, and it's something that we're not taking light of, and hopefully our strategic response would make us be future-proofed to be able to serve the customers of today, as well as the customers that we probably don't have today that we will have in the future. Those are my closing thoughts.
We'll be sure to keep a keen eye. Riddhi, what are your closing thoughts?
I'll keep it very short, but I think as Dr. Siew mentioned, that it is not just about the technology. It's about a lot of other factors: the culture, the mindset, the minimum lovable product as you might want to design. But coming from a technology organization, I cannot help but say that having the right platform foundation, where you can cut off silos with the right platform foundation, how can you focus on the customer with the right platform, and how can you work with the entire ecosystem? That is very, very critical. and that is what firms like Backbase represent are talking about these days. So yeah, I mean, I think that's all from my side. But I do believe that a right technology with the right culture, the right mindset, and the right focus on what is your product is very key towards success.
Thank you for that. And with that, it leaves me only the pleasure of thanking everyone for joining us. Now, I do apologize that we're not able to take all the questions. There's a lot of it flying in from LinkedIn, YouTube, and whatnot, but we did try our best to incorporate into my line of questioning. We do hope you enjoyed the session. There's a lot to think about, but one interesting thing that we've also observed across all the markets is how many bankers, career bankers, move into digital banks over the course of this license being dished out. So it should be quite interesting, both on a personal front for a lot of bankers and also from an industry viewpoint as well. So again, thank you all for joining us. I'm very happy that you guys could all be with us. Have a good day ahead. Take care now. Bye-bye.
Thank you, Vincent.
Thank you.
Bye.